this game-changing top free TradingView Indicator strategy that will skyrocket your profits. I'll walk you through a step-by-step guide on how to set up this killer strategy on TradingView and share real-life examples that demonstrate its true power. As always, nothing in this video is financial advice. It's all for informational purposes only. On TradingView, we're going to search for the following indicator, which is a limited Fisher transform indicator. However, before we begin with this phenomenal trading strategy, make sure you hit that like button on this video, type boom in the comments below. Also subscribe and turn on the bell so you never miss any of my future videos. First, a little about the Fisher indicator. It can help you identify trend reversals on the charts. It's based on true moving averages and also oversold and overbought areas. This means that it takes into account both the short-term and long-term trends of the market, as well as the moments when prices become either overvalued or undervalued. By using this indicator, you'll be able to spot the moments when the market is about to turn around and start moving in the new direction. This can be incredibly useful for traders who are looking to make quick profits by buying low and selling high, or for those who are looking to hold onto their positions for a longer period of time. Next, we are going to make a couple of adjustments to the indicator to get even better results. All that we are going to do is go to the settings and under the input section, change the length from 9 to 10 and the upper limit from 80 to 70 and the lower limit from 20 to 30. Next, under the Styles tab, we are going to unselect the middle level and update the upper limit values and the lower limit values to our new values that we used under the input section. By doing this, you'll be using the basic levels of the RSI or Relative Strength Index for oversold and overbought conditions. This means that the indicator will be even more accurate in identifying the moments when prices are either undervalued or overvalued. While it's true that this indicator is highly accurate, it's important to remember that you shouldn't rely solely on its signals. In trading, it's always a good idea to have multiple indicators and tools at your disposal to confirm your analysis and make more informed decisions. That's why I'd like to introduce you to another indicator that can complement and enhance our trading strategy even further. By using multiple indicators and cross-checking their signals, we can improve our overall accuracy and minimize the risk of false or fake signals. So, while this indicator is definitely a valuable tool to have in your arsenal, don't forget to use it in conjunction with other indicators and your own analysis to make the most of your trades. Today's video is sponsored by Trader Edge. You guys have seen me using it in a bunch of my other videos because backtesting with Trader Edge is 3 times more effective than traditional methods like spreadsheets. It also provides you with an edge score, which is determined by things like profit factor, average winning and losing trades, meaning you can easily compare different trading strategies according to the edge score. So make sure you check out their website. I've got a link to it in the description below. And yes, you can sign up for free. Next, navigate to the indicators tab and search for SDCPR. We are going to add the SD Central Pivot Range Indicator to our chart, and you'll be able to see the amazing implementation of the pivot algorithm in action. This indicator is incredibly useful for identifying relevant levels of support and resistance based on the CPR algorithm. The algorithm calculates these values every day, giving you up-to-date information on the key price levels that are likely to influence the market. By using this indicator, you'll have a better understanding of where the market is likely to turn and where prices are likely to be met with buying or selling pressure. Under inputs for the indicator, we are going to make a couple of changes. Change the number of daily CPR back from 7 to 100, and then we're going to change the value of weekly from 0 to 1. Next, we're going to change the monthly CPR back from 0 to 3, and the number of yearly CPR back from 0 to 2. Next, under the style option, we're going to use the 3 lines of the daily and only the middle lines of the weekly, monthly, and yearly. After making these changes on your chart, you should look like the following. The green levels are our daily pivot point levels. The blue represents the weekly, and the last 2 are monthly and yearly. When it comes to profitable trading, detecting the right levels of support and resistance is crucial. It's not enough to rely solely on buy and sell signals, no matter how accurate they may be. You need to have a solid understanding of when to enter and exit trades, and identifying key support and resistance levels is a big part of that. Now that we have a better understanding of reversal trading and trading levels, let's take a look at a trade example. First, we need to wait for the moving averages to cross on the Fisher indicator and produce a buy signal in the oversold area. Next, you need to wait for the moving averages to cross over the oversold region and come back up again. Meaning, I would wait until the point here where it has crossed back from oversold. You'll also see that the price action has broken a major level illustrated by the SD-CPR line. After the strong bullish candle showing momentum, and once all the confluences are in place, we are going to enter our buy trade with a stop loss below the recent swing and aim for a 1 to 2 risk reward. Alternatively, you can aim for the next point of market structure. Let's take a look at another example. This time is going to be on a different time frame so that you can see the power of this incredible reversal trading strategy. However, before moving forward, if you haven't already, make sure to drop this video a like and also subscribe and turn on the bell so you never miss out on any of my future videos showing you some awesome and some of the best trading strategies on TradingView. Firstly, we are waiting for the price action to approach the SD-CPR and form a rejection. During that rejection, away from the SD-CPR, our moving averages crossed in the oversold area and are giving us a buy signal. Wait until the moving averages cross back from the oversold area. Enter your buy position with your stop loss below the recent swing and aim for a 1 to 2 risk to reward. Next, let's take a look at the sell side example. Firstly, from the chart, you can see that Bitcoin broke the daily and weekly levels. Next, we need to wait for price action to approach a key level of support and resistance that we identified with the SD-CPR. Once price action is approaching the support zone, we are waiting for the Fisher indicator to give us a sell signal. Now, we need to wait for the moving averages to cross back from the overbought levels as confirmation of the potential reversal. Once all the confluences are in place, we are going to enter our sell trade with a stop loss above the recent swing high and aim for a 1 to 2 risk reward. As always, feel free to test this out for yourself with the stuff that you guys like to trade, like crypto, forex, stocks, or whatever it is. Like all other indicators, make sure to do some back testing. The strategy and TradingView indicators for this strategy used in this video are completely free to use. But if you're looking for an amazing premium TradingView indicator, I personally use Lux Algo Premium for my trading, and I highly recommend it to anyone that wants more success in the markets. It's trusted by over 50,000 traders. I've got a link to it in the description below, so make sure you check it out. And if you want to see the trades that I'm actually making, like this one that I recently posted that got a 92% return, check out my free Telegram channel and join my all access Patreon. Links to those are in the description below as well. If you want to become a highly profitable trader, be sure to check out this next